Small cases have been available in India since July 2016. Now, over 500 such portfolios are available. These are portfolios created and managed by SEBI-registered investment advisors and equity research analysts. In this interview with Business Standard, Vasanth Kamath, the founder of Smallcase, explains the concept. How do they work? Whom are they suited for? How do you select the right small case for yourself from the wide variety that is available? And what do you do if there is underperformance in the portfolio? Good afternoon. Welcome to our show. I want to begin by asking you about the concept of small case. What is this concept? How does it work for investors?
Sure. Very simply put, a small case is a basket of stocks, exchange-traded funds or ETFs, or real estate investment trusts or REITs that are selected and weighted in a manner to reflect a specific theme, strategy, or objective. Think of it like a playlist of stocks or ETFs that's based on an idea. Every small case is created by a SEBI-registered individual or entity. It could be either in the research analyst license or in the investment advisory license that they possess. How it works is, for the investor, they basically can discover from a catalog of ready-made small cases that are present on different platforms. They can invest in it, take a portfolio approach towards all the constituents in that small case. They can track it as a separate unit and manage it as, again, another unit where they can SIP into the small case. They can update or whenever there's a rebalancing in that small case, or they could add or remove stocks as per their discretion.
How long have you been offering small cases? And altogether, how many do you offer currently?
We launched the Small Cases platform in July 2016. So close to 6 years now that Small Cases as a concept has been available to the Indian retail investor base. Over time, the catalog has grown. The catalog of the kind of small cases has grown to over 500 professionally managed portfolios. And these are across different types, be it asset allocation, large cap, factor-based, smart beta, thematic, model-based, sectoral, etc.
You said that these small cases are available on a number of platforms. So what are these platforms where the investor could find them?
Few types. They're obviously available on the small case properties like smallcase.com, the website, or the Small Cases app you can download from the Play Store or the App Store. They're also present on the platforms of our broker partners, where you can discover small cases that have been vetted and shortlisted by the brokerage research teams. It's also available on non-broking properties like wealth apps, information portals, advisory platforms, etc. As well as you can go directly to one of these small case creators or managers and discover it on their own websites.
What are some of the checks that you run before you accept a strategy on your platform?
There are two levels of checks that the Small Case platform runs. One is on who the creator is, the individual or the entity that has the license in order to be able to create small cases. So the first check is on them while onboarding, as well as on a regular basis, whether they have the right license, there's validity, it's not been cancelled, it's not been expired. Also, in case of, say, how they're using their brand there, whether they have the rights to basically use those brand names, trademarks, etc. The second level is on the small case before someone, a creator or a manager, publishes it, which is where, on the data that's shown. As a platform, we only show the live data that once a small case is published so that any investor can start consuming it or investing into it. Only from then on, we show the live data, the ratios, the metrics that are computed by the platform on an automated basis. If there is any backtested data that's, again, verified with the manager, whether that's correctly audited and calculated there. Also, on a small case level, we basically check from a naming as well as a description perspective if there is anything misleading over there in terms of how it is named, or even say if there is a huge mismatch between the naming of the small case, the rationale of the small case, and the constituents there. So ideally, on one level, what we do is we check if the manager is is suitable and capable to kind of offer these services. At the same time, whether the small case is true to mandate or true to label, whether what they are seeking to provide with that small case also reflects in its constituents.
I want to revisit the point about who can manufacture these small cases. Could you revisit this point, please, once again?
Sure. Every small case that is visible on the platform is created by a SEBI-registered individual or entity. They could be a research analyst license holder or a registered investment advisor as well.
Okay. So only licensed professionals can launch these small cases, not anyone
Absolutely.
on the street.
No, only licensed professionals, and that's where the first check on the managers also happen, whether they have the right license, at the same time whether it's valid for a longer period of time and it's not expired or cancelled anywhere in between.
How much is the fee that a customer has to pay? If you could indicate some range for the fee.
Sure. It depends on the small case that the customer is looking at. There are two types of small cases. One where there is no fee attached to it for the research or the advisory that is provided with the small case. The other where these are fee-based small cases. Within fee-based small cases, there are again two types. One is a fixed fee, which is basically a subscription fee that a user pays on a recurring basis. Usually, the average on the platform ranges from 500 rupees to 750 rupees per month. The other kind of fee is on the amount invested or the net worth of the user, which is deducted at the end of every month. There, on an annual basis, the limit, obviously, that a manager can charge in terms of that pricing is 2.5% on an annual basis. The average is between 1 to 2%.
So, Vasanth, investors can invest directly in stocks. They also have the option to go to mutual funds. Why take the small case route then? What is its differentiating proposition?
Two things. I think one, when users are starting to invest into direct equities or stocks for the first time, instead of having the entire onus on them to kind of build their own portfolio, do all the research, small cases as a concept helps from being a great gateway to investing into direct equity. It provides a diversified portfolio approach towards investing into equities, as well as the professional management layer there. Compared to mutual funds, however, the idea of the small case concept is to have strategies or exposures that you do not get in the mutual fund format. So the ideal journey for a user is to basically, when they're investing into equities, is to start out with the mutual funds form factor, and as they want to get more involved in decision making, want more control on their portfolio, that's where they move towards direct equity, which is where small cases comes in as a middle ground.
So what additional freedom or active participation does the small case allow a retail investor?
Sure. Just from the structure perspective of it, it's very similar to stocks that way, that the underlying constituents, be it stocks, be it ETFs, be it REITs, that are present in a small case, once you invest in it, those actually lie in your own demat account. Like, no small case manager has access to the funds of the user, has access to the securities or the constituent units that are bought as part of the small case. So the retail investor or the customer is in the driver's seat all the time. They know exactly what they hold in that small case. If there is an update or a rebalance issued by the creator or the manager, they can decide whether to apply that update on that small case, skip that update altogether, or edit the rebalance update as well. In at any point of time, they can also choose to add or remove stocks, change the weightages if they would like to. So full control lies with the investor here, because of the structural difference that all the underlying constituent units lie in the demat account of the user themselves.
So the investor essentially has greater control over his portfolio. The discretion
Absolutely.
whether to follow or not to follow still lies with him.
Completely.
Okay. Which type of investors should go for a small case? What is the profile that is, or profiles that are suited for going for small case?
Sure. The ideal investor, type that prefers the small case form factor are people who have spent some time in the equity markets. They understand the nuances. They understand the vagaries of how equity as an asset class works. Most of them have, started out with mutual funds as a concept. They understand how diversification, professional management enhance, or add to portfolio building on an overall level on the equity side for the user. Now, when the user wants to start taking more control, be more involved in the decision making process of what goes into their portfolio, that's where they start adding small cases as a part of their portfolio. And that's the ideal time that small cases should be introduced to the user.
So essentially, you're saying that you begin with mutual funds, get accustomed to the volatility of the equity markets, and then when you want greater control, or perhaps you want exposure to more specialized kind of themes, then you go for small cases.
Absolutely. It's a life cycle from an investor's perspective that when they start out, start building their portfolio on the equity side specifically, it's a no-brainer to basically start out with a format or a form factor like mutual funds. But once the investor gets comfortable with understanding how equities as an asset class works, that's where they would want to exercise more control. They would want to take more calls, be it in terms of what you mentioned, even say the kind of exposures or strategies or styles of investing that they're taking. They want to diversify beyond the 5-6 types that most investors choose. That's where small cases comes in as a way to action on that.
Since March 2020, millions of new investors came into the markets. So many demat accounts were opened. So do small cases have anything to offer to the new investor who is coming into the equity market for the first time and should not ideally be going into direct stocks?
Absolutely. I think this is a last 2-year phenomenon that we've seen where a lot of Indian individuals have started their equity allocation with direct equities versus the mutual fund route, which has been the more traditional route that's been followed. In that case, where we have seen most usage of the small cases concept or the small cases platform is where they start out with ETF based small cases. These are small cases that comprise of ETFs, not of stocks or direct equities. In that case, they also get a diversified exposure to, say, equity. For example, we have the top 100, top 250 stock small cases, which is a combination of 2 to 3 ETFs that give you exposure to a larger index versus just the top 50 stocks by the Nifty index. The other kind of small cases, which are again ETF based, have been the asset allocation ones. For example, we have all weather investing, which is a combination of equity, debt, as well as gold with 4 different ETFs. We have equity and gold, which is a portfolio of 2 ETFs, that's equity as well as gold, that's continuously rebalanced to ensure that there's balance in the portfolio, there's equity and debt, etc. But ETF-based small cases have been the most popular ones for investors who are completely new to the equity markets, who opened a demat account and are looking to start taking that exposure. In that case, be it asset allocation, be it a more diverse exposure to the top 100, 250 stocks, these have been the most popular ways to kind of start their journey.
So there are very safe options, well diversified options also available for completely new investors within the small case universe.
Wouldn't call them safe, but relatively low, much lower risk than just stocks, small cases. Yes.
True. Who monitors the performance of small cases? Once I have subscribed to a small case, then who monitors its performance to ensure things go well? Or say when the markets are tanking like they are doing now, who looks after the performance?
It is the manager of that small case, whoever has created that small case. They have to continue managing that small case. The different ways they do that is obviously one way to do it is to continuously monitor, review, and issue a rebalance update if required. With the rebalance update, they can issue a change in the constituents. They can say that in their original small case, they are adding these stocks or they're removing these stocks or a combination of the two, or they could also change the weightages of some of the constituents inside that. For example, say, if we've seen this in over the last few months that many managers have moved to, say, for example, a fixed income component. They're using a kind of, moving to cash so that, from 100% allocation to, for example, stocks, they're moving to, say, a 60-70% allocation to stocks. The rest goes into, say, cash through an ETF approach there. So that's how, say, the creator or the manager of a small case can issue rebalance updates and this comes as a result of continuously monitoring and reviewing the portfolio that they've created.
Now, what if there is underperformance in the portfolio? For how long should a retail investor kind of tolerate such underperformance? And what is the advice there?
Sure. There are two reasons I think that where this could happen, right? Where there could be underperformance. One is on a rational level, which is, say, basically what the strategy or the idea or the theme of that portfolio itself is, that isn't working out. The other is where, say, the theme exists, which is more, say, evergreen or, specific to a certain objective as well. But the selection of constituents or stocks or ETFs inside that small case does not match it. So in the second case, that starts getting flagged or noticed by the platform itself, because there is a divergence in terms of what the small case is supposed to reflect and what the constituents actually reflect. In the first case, if, say, for example, the underlying rationale or the theme of the small case itself is not playing out, that's where the manager also has an option to basically say that I'm playing out the small case. I will not be tracking or rebalancing it anymore. And that goes out as an intimation to all the investors in that small case that this small case will not be tracked or rebalanced by the manager. Again, complete discretion with the investor to decide what they want to do. But this has happened very few times. It generally happens for shorter term ideas, strategies, or themes that kind of exist on the platform. And even in those cases, which are, a very minute part of the entire thing, that's where, those were time bound from an idea perspective itself.
And do all small cases come with their own benchmarks? How do you compare performance?
Sure. Each small case has multiple benchmarks. There is a core benchmark or a key benchmark that is, again, decided by the platform based on the composition of what goes into that small case. For example, if a small case has a higher composition or allocation towards mid caps versus, say, small caps or large caps, the mid cap index or that stock composition index is basically chosen as the benchmark for that small case. If tomorrow there, for example, is a rebalance update and the allocation moves towards largely being towards small caps, the benchmark automatically changes to something towards a small cap. So each small case comes with a benchmark. We are working on that to kind of increase the universe of benchmarks that can be allocated to a small case, so that, when an investor is deciding on which small case to either invest in, or once they've invested in and continue to track it, they can basically see how their small case has performed versus the most relevant benchmark for the composition or the selection of constituents inside it.
One final question. The small case universe is obviously very large. Would you have some words of advice for investors on how to select the right small case for themselves?
Sure. I think this goes back to what we spoke about, where it depends on, there are largely two types of investors who would come to small cases. One is the set of people who have already built their portfolios with mutual funds. They have a core set already over there. They're now looking to diversify beyond these strategies that mutual funds offer and basically add more exposures to their portfolio, which is where they should look at, say, for example, more of the thematic kinds, more of the model-based kinds, more of these strategies that do not exist in other formats. They are managed and continuously monitored by professional entities and individuals over there. So it makes sense for them to kind of take smaller allocations to them and continuously increase it. These could also be very long-term shifts or trends that are unfolding in the Indian economy. For example, say electric mobility is something that's transforming the auto sector. There's a small case around that. Say specialty chemicals is a very interesting sub-segment in the Indian manufacturing industry. There's a small case for that. So there are multiple ideas, themes, strategies that could very well fit into an investor's portfolio, given they have their core portfolio already sorted with other form factors. The other set of investors, which we have seen, a larger influx from in the last couple of years, are those who are completely new to the equity markets. For them, the set of small cases that we spoke about, be it, the ETF-based small cases that give you a more diversified exposure to just equities, or the ETF-based small cases that give you exposure to different asset classes in one instrument. I think those are the sets of small cases that a completely new investor should look at. Recently, we also added the concept of goal-based investing, where a small case, these are the horizon set of small cases, where each small case is tagged with a year. For example, say Horizon 2035 is for an investor to allocate to if they have a goal in mind that matures at 2034, 2035, 2036, that kind of a range. What that kind of small case does is again allocate to ETFs, but the allocation to asset classes keeps changing as the goal keeps coming to that endpoint, whatever is mentioned on that small case, the year that's mentioned there. So these are some of the small cases, the ETF-based one, that a completely new investor should look at. Whereas for an investor who's already built their core portfolio with other form factors, should start looking at more focused, more concentrated strategies, which could, in the right allocations, which could basically add some alpha to.
And would you have some words of advice for small case investors on how to weather this kind of ultra volatile market?
Sure. It again depends on the kind of investor they are, right? And I think I think one thing that we are seeing on the platform from purely, an aggregated data perspective is not a lot of people are actually redeeming their holdings, which is a good thing to do. It's the worst time to basically exit out of something that you're holding from a long-term horizon. Many of the investors are actually taking this as an opportunity to average out their costs as well and invest more. So I think exiting during such times is obviously not the best idea. That would be, something that all investors, not just small case investors who have invested into equity, should basically abide by.
Thank you so much, Vasanth. It was a pleasure getting to know about the concept of small cases. I hope the viewers who see this video find it useful and they're able to make the best use of small cases. Thank you so much.
Thank you so much, Sanjay. It's a pleasure being here.
Goodbye.
Thank you for having me.